Crypto assets initially take a hit on Russian invasion news, but capital controls trigger a rally as Russians flock out of the ruble and into Bitcoin. Volatility spikes as prices swing wildly in both directions, and on-chain metrics show that the weaker hands may already have been flushed out. All this and more in this week's Crypto Insight. So crypto this week, whilst crypto markets took a hit over the weekend, just like every other risk asset, yesterday's news that Putin had banned FX transfers abroad has triggered a big spike in crypto, taking Bitcoin from around 37, 38K to 43K. So a big knee-jerk higher, right? And that's that. You can see that green candle there. Now that's going to embolden those who've been calling crypto a safe haven asset, which up until now it just hasn't traded like, right? It's been very correlated to NASDAQ. It hasn't been correlated to gold, which has been working well as a safe haven, and people have been kind of ridiculing that call. All of a sudden, capital controls seem to be where crypto comes into its own, right? And its major use case to allow country citizens to circumvent the local laws around money, so they can continue to transact and move their money around, as well as protecting them from a local currency that's imploding, right? We've seen this in things like Venezuela, Argentina, Turkey, right? They're big crypto users. Same story in Russia now, right? Do you want to hold rubles or do you want to hold Bitcoin? Now, ECB urges haste on crypto regulation in the wake of Russian sanctions, you know, pretty much preempting that a load of money would fly into crypto out of the ruble. And so there is going to arguably be some headlines out on this, right? So I don't know exactly what they're going to be able to do. But, you know, we know like Canada, for example, blocked certain crypto wallets and things like that that were trying to help the convoy. So you are likely going to see some stuff around crypto regulation to prevent this. But then also, crypto is being used to help the Ukrainians, right? To help the Ukrainian army and kind of send money to them, right? So it's a tough one to know how hard they're going to come down on it at the moment, right? Because both sides are kind of using that facility. Obviously, Bitcoin dominance has popped. So on that rally, you saw it go from like 42 to 44%. The whole store of value and seizure resistance properties of Bitcoin, or supposed properties, we'll see if they are true, are leading to the dominance on that latest pop. There are competing narratives at play, right, with regards to the latest pop. So on one hand, people are thinking of it as freedom money. It's actively being streamed to the Ukraine army to offer support and with fast impact. And on the other side, you know, the ability for wealthy Russians to bypass sanctions, which is what the ECB basically want to regulate it for, right? So these are the two conflicting narratives right now. The Ethereum Bitcoin spread is drifting lower as ETH kind of waits for a catalyst, and BTC very much the focus due to macro and geopolitics, right? So you're seeing that spread kind of drift down. Yeah, for now, no reason to get overly excited about ETH, basically. Right? I think Bitcoin's kind of running the show here at the moment. Yeah. Okay, if we look at on-chain stuff, the key takeaways this week have been, for me, we didn't really, on that news of kind of invasion last week, we didn't see that major spike in realized losses that we often see on a capitulation, right? And that suggests that the weaker hands were already out weeks ago. So we had seen a bit of a capitulation before, and now this in January, and then this time around, we haven't really seen much. Okay, so that's actually quite bullish. Suggests that the weaker hands are already out there. Yeah, people who had bought the dip in the last 1 to 3 months were dominating on-chain spending last month, and again, those are the guys who've been kind of throwing in the towel, right? Already thrown in the towel. There hasn't been a huge rush onto exchanges. As we've seen in previous capitulations, right? You often get that spike on exchanges where people want the liquidity to be able to exit. That seems to kind of not be going on right now. Okay, so more signs of the people who do actually hold this stuff now are in it for the long haul, right? Now, anecdotally, Raoul Powell in his latest sort of macro insiders bit with Julian Brigden was saying that, his fund has raised 100 odd million or whatever from instos, and every conversations he has with instos, they are accumulating, but it's been a slow process, right? There's a lot of hoops that they have to jump through to do it, and that's ongoing, right? So expect more and more long-term hodl type behavior to come in from these instos that are slowly going to accumulate, okay? And then a large amount of coins are maturing to like older than 3 months old, okay? So that's, if you look up sort of that blue at the bottom right chart, that's basically showing that, that the amount of coins maturing, is similar to previous phases where markets were kind of finding a base before they were then able to rally, okay? So that hodling, the cohort of hodlers is kind of growing, basically. That's the idea. That's what we're seeing from on-chain. And all the short-term guys who tried to buy the dip as a punt have been kind of puffed out of there now, basically. Right? So the only guys who are still really in there are the ones who are in it for longer-term type moves. If we then go over to volatility. So this week, crypto realized spiked as the war headlines generated wild swings in both directions. BTC realized in short maturities currently trading in above the 75th percentile, right? I realized vols at around 20 vols above implied right now. So typically that doesn't tend to last very long. If realized spikes above implied, usually implied kind of then catches a bid, or market stabilize and realized comes back down. So I suspect realized probably comes back down because the implied isn't crazy expensive at these levels. Right now you've got short dated implied at 75, you've got realized at like 90, 95. Okay, so I suspect realized will stabilize here. Now last week you also had the expiry, right? You had the February expiry, 1.6 billion notional of options expired. The skew was towards calls in terms of notionals, sort of almost, well, roughly sort of 60-40 or something like that, 65-35. Now the settlement level at 38.5K meant that in the money puts amounted to roughly $14 million of premium that was realized, whereas calls only ended up being in the money for like 3 million. There weren't very many calls that were in the money yet down at those levels, right? March expiry is likely to be much bigger, given that it's a quarterly. Currently standing at 2.6 billion notional outstanding, and that may even grow as we head towards the end of the month. Okay. If you look at term structure, persistently inverted term structure. So last week the term structure inverted in anticipation of war risk, and this week it stayed inverted as markets have actually been moving, right? And they've been moving well above their implied. The vol of vol has been absolutely huge. So you can see the chart on the right, which shows all the different maturities of the rolling kind of at the money vol. And you can see that the pink line, which is the 1 week stuff, whereas, a week ago it was well below the rest of the curve, it then flips to above the rest of the curve, then it goes back below, then it goes above again. I mean, back and forth like a yo-yo. And that is basically the term structure going from contango to inverted to contango to inverted, and it's doing it multiple times over the week, right? So this level of vol is something we haven't seen for quite some time, okay? Now, I've been assuming that in a rally, the curve would mean revert and go back towards contango. The violent move on the Russia capital controls leaves things far less clear and open for a potential, huge upside vol as well, right? So I'm much less confident the curve's going to go back into contango on the upside now, because the upside could be another 10,000 points in like a matter of days, $10,000 in a matter of days. And I think that's not going to necessarily make the curve mean revert, right? So I think hence why the curve is not collapsing and is staying inverted. It kind of makes sense. That risk is real and something to be aware of, right? Now, if you do want to sell gamma, then you probably want to be looking at things like, iron condor type structures in the front end, given that the front end is elevated. Kind of just prick your break evens and see what you think looks attractive, basically. Yeah. And now, obviously, because of that risk to the upside that's now come out of the blue, the skew has kind of reflected that, right? So skew had been naturally more bid for puts given the conflict. But since that last upswing, which happened very quickly, skews normalized, reflecting the gap risk higher, okay? So there still remains risk of crypto regulation headlines, which could make us swing back down again, where if they try and prevent certain actors in Russia from moving funds around and things like that. So I think things remain fluid. But, you know, I could see a case for super short dated skew to flip for calls if we continue to see that type of gappy price action to the upside on as more and more people kind of fly into crypto and out of the ruble, right? So whereas I think medium term skew needs to stay for puts right now because of the macro risks that, you know, crypto is not going to be able to probably escape in the longer term. In the super short term, there is a risk of like 10, 15K fast to the upside if these things kind of continue. And that isn't really being reflected in the shorter dated skew right now. Yeah. Okay, so that's my thoughts on crypto skew. If you then look at what option flows we've seen, flow-wise, we saw some opportunistic March 45,000 calls being bought before that pop. So when we were around 38, 39K, someone came in and bought a clip of about 1,000 of those calls. They pretty much doubled in value fast. So that was a decent trade. You saw Ethereum, March 2100 puts last week trading in decent size, and also April and June calls have been trading in Ethereum. Now, in the last 24 hours, quite a big clip's gone up in May, 4,000 calls in Ethereum. And that looks like a sale, right? The vol's been kind of trading down consistently since that trade. It does look like it was a sell print, maybe an overwrite of some kind. I think the May expiry has just become listed, right? So after the February expiry went off. So, you know, that's a fresh call overwriting type trade. It looks like that's hit the street in about 8,000 options, okay? So those are the main option flows that kind of caught my eye. The DOVs, last word on those, as always, short date option flows still continue to, you know, see the DOV selling on a consistent basis. Here I've got the kind of super short dated in bright green is the 4th of March. Those were the strikes that kind of were active in Paradigm last week. So reasonable amount of that is probably hedging out the DOV. So like that 2,500 strike to the downside and that 3,000, 3,100 area on the upside, basically. Now, since the 2 a.m. auction last Friday, which is when the friction auction is now moved to. So from that window from 2 a.m. to around 10 a.m., the vol collapsed by about the customary 10 vol points, right? So I told subscribers that I smashed out some of those strangles as a bit of a test trade. Test trade worked pretty well, clearly. And the rationale was obviously the flow was there. The market seemed to have found a bit of equilibrium after the war news and the bounce back. And then the vol was still at around 88%. So when the vol's at 88%, it's got a 10 vol room to go down quite comfortably, right? If the vol's at 60, 65, I'm less excited about smashing that out, even if the DOVs are coming. But when it's at 88, it seemed to present a reasonable opportunity in terms of risk reward to just sell some vol and buy it back in a few, the next morning. And that's exactly what I did. I didn't stay short the position. I didn't catch the lows in vol, but I wasn't short gamma over the weekend either. And the markets have been a bit mental, right? So I'm kind of glad that I was just an opportunistic hit and run type trade that I did on the vol around where I know the flows were concentrated, basically. And this may be a regular trade setup, right? Market makers are front running it, so why can't we, right, as the retail army, right? So I'm sure there's plenty of retail people who do front run it. Like I say, I tend to have a bit of a filter around the level of the vol as well to decide if I want to front run it or not. But if the vols remain elevated, there might be a nice opportunity there to maybe you don't make 10 vols every time if markets are still moving around quite a lot. But 5 to 10 vol opportunity every Friday or every Thursday night as an 8 to 12 hour trade. That might be something worth exploring, basically, right? Until these vaults really get their head around the idea of VWAPing their flows rather than doing it in one shot at one time, basically, right? So anyway, that's kind of it in terms of my summary for crypto. In terms of my trades, I did add, obviously, as subscribers know, I did add some call ratios on Ethereum, 11th of March. They haven't done amazingly. They look pretty good about 2 days ago. They don't look so great up here. So I'm kind of managing that. I nibbled on some 4th of March, 3,100 calls to kind of reduce my delta a little bit. They weren't too expensive because they expired this Friday. I'm just using them as a bit of risk management at the moment. But the game plan on that trade was probably unwind it on Friday anyway, when the 11th of March becomes the maturity to sell for the DOVs, basically. So if that vol does have a downward impact, flow does have a downward impact, then that'll probably give me my out to get out of that trade, basically. Right? That's the way I'm looking at it. Okay, that's it from me. Over to you guys. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.